Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 10th of September. And a day with stuff rather thin on the ground at the moment, but starting on with Avacta, which used to be a glorious situation. Rather extended consolidation either side of 150, I suppose, since June, which is rather frustrating. But it does look as though the shares are finally re-engaging. At the intraday high to date of September was 177, let's call it. So an end of day close above that intraday peak today should be enough to get the shares, obviously, at least to retest last month's resistance at £2 and best case scenario target up to £2.40, which is the top of the late April price channel. At the moment, would hope that there wouldn't be anything sub 165, which is the 20-day line. So that's the notional stop loss ahead of a potential £2.40 target over the next month or so. Next up is Capex, which had a flurry a couple of weeks back and remains something of a favourite amongst the fans of the tiddlers. The highlight today, the gap through the 20-day moving average just under 4p, and while we remain above the 20-day line, looking for a retest of last month's resistance at 5.3, but the big picture target up to 8 pence, which is the top of that wide rising trend channel from July last year. So maybe on a couple of months view, that would be the destination for the stock. Rather more straightforward is Greatland, obviously a fantastic stock over the last year or so, even before the gold boom that we've had. Just for the people not familiar with the current situation, last peak in July, 15.7 pence, and while we're above that, looking for the top of the rising trend channel from December as high as 23, so that looks pretty well set and well behaved, actually. I mean, for an extended uptrend stock, I think it's been pretty smooth, relatively speaking. Stock which has been a little bit frustrating as well over the recent past has been Gunsynd, doing great on the fundamentals, but the chart a bit frustrating. But it does look as though with today's price action, probably the price action actually of the turn of the month, where we had 3 intraday tests of the 50-day moving average, which was by then rising. So that was pretty good probing by the stock. Today we've had the stock open at the low of the day and shoot up to the high of the day so far. Should be the case that an end of day close above a penny will take the stock on, and we won't have any pullbacks now, given all the testing that we've seen already. And we would reiterate the target here of 1.8 pence, which I've been talking about for quite a while, and really 1.8 while we remain above the 200-day line at 0.85. 1.8 hopefully over the next 1 to 2 months on Gunsynd. Wameja Diagnostics, finally we're over 70 pence, which was the most frustrating part of the price action here. Hopefully it'll come through on the chart. 70 pence really post-July resistance. We should have the first end of day close above that today, and above 70 pence. We're looking for the top of that rising trend channel from April, as high as hopefully as high as £1 5 pence. Time frame on that the next 2 to 4 weeks. Hopefully the shares will not hang around too long. A nice looking situation coming up here in the form of Panther metals. What it looks as though the stock has done is bounced off for the floor of the rising trend channel from basically the beginning of the year. Floor there around, let's say, 8 pence. That was former resistance in June, and so above 8 pence and that April uptrend line, looking for further upside. Obviously, initially the retest of the August peak at 14 pence, but the big target here, hopefully for later in the autumn, would be 22, 23 pence, which is the top of the 2020 price channel. If you're cautious on the stock, maybe wait for an end of day close above the 50-day line, just above the 9 pence level. Looked at Equatorial a couple of days ago, but as it is a bit of a thin day, we'll have another look today. Here you can see that shares still hanging around the 1.1 pence area, which is was the initial target here on the stock, the January resistance line. But above 1 pence, looking for a new leg to the upside as high as 2.5 or maybe 2.7 pence, which is the top of the overall broadening triangle from the beginning of the year from on the daily chart. So there's the broadening triangle there. So above a penny, still plenty of potential upside there for Equatorial Palm Oil. Trafalgar been a bit of an enigma over the last few weeks after the spike through nearly up to 0.3 pence the beginning of July. Current situation, though, I think if you're a positive on it, you would say that we haven't actually needed to test the 200-day moving average of 0.13. We haven't needed to fill the gap, or we've been too strong to fill the gap down to 0.13 as well. And so basically, while the current setup remains there at, let's say, 0.14 as support, looking for an imminent break of that July resistance line and a retest of 0.3 pence, hopefully as soon as the next week or two. So that would be probably maybe a more bullish call than some would make, but with the rising 50-day line, the failed gap fill, and the overall support above the 200-day moving average, I'm interpreting this as a strong situation which will surprise on the upside. Just a couple of stocks to go now. The first one of the rises of the big rises of the day so far, Wameja. In fact, what's interesting here is that we actually had a resistance line break just at the beginning of the month. The shares sort of had a bit of a tree shake after bull trap through 6 pence and then came back. But if you were able to hang on, then you would have had the benefit of today's gap to the upside. Overall target here up to 11 pence, which is the top of the rising trend channel from July last year. And that target valid while we hold above the 6.3 initial peak for September. Finishing off with the Zoetic, which I believe has had some positive news today. Here you see that we gapped up through the 20-day moving average at 18 pence, probably pulled back rather more than maybe some would have liked or expected from that 24 pence peak last month, but stayed above the 30-day moving average, which I suppose is a plus. But the view is at this stage, at least while we're above the 20-day line at 18 pence, looking forward to a top of September trend channel target from last year as high as 40 pence, which is obviously quite a optimistic looking target, but it looks like the setup here is of that kind of caliber. That's it for me today. More updates tomorrow.